Welcome to MnDoRa channel. In this video, I will be speaking about the BTCUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the on-chain data to see how Bitcoins are moving on and off from exchanges. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on the spare. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of previous monthly resistance, which has now turned support. In fact, from here all this previous move to the downside was created. We then had the breakup of this zone, and the break came after the creation of this, of the halving essential that we had here when the market more or less created this red candle. This is where we had the halving. Market entered into a bull market. Then we had the bear market, which in my opinion just ended here with the retest of this previous resistance to our support. Now anyway, I do not expect the market to create new all-time highs before 2024, only after 2024, so only after the next halving. Only at that point expect the market to print new all-time highs. So here in the monthly, everything seems pretty bullish, and we could expect a bit more bullish continuation. Dropping down on the weekly time frame, what do we see here on the weekly? I did speak about BTCUSD a few actually. A couple of weeks ago, I spoke about all the reasons for which we could expect to move to the downside. Stop hunting all the people that had their stop losses below this low for a liquidation, and then at that point creating the rejection to the upside, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, in a situation like this, more bullish price action could be expected after some short-term correction and for the market to essentially create the normal movements that it would create. So no market just goes straight up. In every market you will see a series of impulses and corrections. So what we could expect at this point is a correction, before then getting more potential bullish continuation. And in general, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that we have the 50% and 0.618 Fibonacci retracements currently lining up exactly at this zone, which is also the previous weekly resistance turn support, creating a confluence of support at this zone which we could expect the market to potentially test, and then to reject to the upside, dropping out on the daily time frame. What do we have? Well, from a daily perspective, what we can notice is that we have a market which at the moment at this level has previous daily support, which unless the market will manage to successfully break below it and then break above, it will continue to hold the market in this range where it currently is. Because clearly the market at the moment, at least from a daily perspective, is in a range in which it is bounded from above by this resistance and from below from this support. Now we have seen already a few days of just horizontal movement. So what we would need in a situation like this is potentially to see a move to the downside, retesting that 0.32 that we have previously identified on the weekly time frame, and then a break back above that would be a very good movement, because at that point we would have new liquidity coming into the market, and on the retest of this previous support, which would again be acting as support here, that is where we would have the highest probabilities to see a potential rejection to the upside. Now if we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, what we can see here is that the black line is the price, the purple line is the amount of Bitcoins on exchanges as price was dropping. The purple line to the month of Bitcoins in exchanges was dropping even harder, showing massive illiquidity in the market, because all these Bitcoins are getting moved away from exchanges, are less likely to be sold in the open market. So that if demand gets increased, or if the month of Bitcoins emitted to circulation gets cut in half, which is exactly what will happen in 2024, at that point, price should increase to accommodate for that new demand. So if we do get the break back above the structure on the retest, how we could be approaching a potential rejection higher? Well, as usual, trading is reactive and not predictive. The monthly, weekend, daily combined with the on-chain data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, The best timeframes are the entire timeframes. So for our and lower, therefore what we could be doing potentially also with students. This monitoring price action from an intraday perspective during this mostly downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market, and if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries. At that point, we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if enjoyed this free house location and update, make sure if you drop a like and a comment. Does sewer recreation of more free analysis location and updates for all of you, and I will see you in my next breakdown.